What's up everyone, and welcome to another Bitcoin market update. In these videos you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. And today you'll notice my background's a little bit different. Today we are in the airport doing our daily video. And so let's dive into Bitcoin here, starting off with a monthly time frame. There's only a couple things that are important to keep an eye on for Bitcoin right now. As we see today, we drew down about 6%. So if we're looking at the monthly time frame, this closes in 3 days and 8 hours, and right now it's not looking good for the bulls in terms of this wick. But the bulls still have some time. If they want to try and pull this up, they're going to need to do so over the next 3 days and 8 hours and close with a longer, lower wick on this candle. Right now it's looking like we're going to close with a bearish candlestick. When I look at the market sentiment right now, a lot of people are calling for this as the bottom and this is the dip, and typically that's what you see on this side of a market cycle. You have the bull run, and then this is where people start to say, oh, this is the dip, I'm buying the dip, and then they buy the dip, and then suddenly they get wrecked because it keeps going down further. So let's talk about the weekly time frame and the key level here. So there's really only two key levels on the weekly time frame. You can see we kind of have this rounded top pattern here, which is a bearish reversal pattern, and you can see that the volume here is significant. This bearish volume is significant enough to confirm this pattern. And so when we're looking at this light blue zone, this is our support zone that we're currently operating on now. If we drop below the zone and close 2 candlesticks below it, this will end up being a resistance zone for price, and a very strong one at that if we do not bounce off of this at least once prior to doing that. Right now we have a pretty weak bounce in terms of the weekly time frame. You can see this long upper wick here of people selling into the rise in price. People are pricing in the fact that we may continue lower, and we'll talk about why that is on the daily time frame in a second. But if we do go below that light blue zone, all we have to do to see where the next support zone is look where the last bullish trend pattern emerged on the weekly time frame on this rise, and that's right here with our low, high, higher low, and then higher high. So this candle right here is going to be our support level. This is down here at about 19,500. So that's going to be where we're watching if we end up going down past this light blue level here. So let's go to the daily time frame and talk about what we're seeing here now. This is important. This is the most important thing that I've seen when I was looking at the charts today. If we turn on the super guppy indicator, you can see that this is an indicator that shows you several different exponential moving averages. And so when you're looking at this, when it's in a bull trend, there's two different types of moving averages within this indicator. There's the fast EMAs, which are shorter term time frames, and then there's the slower EMAs, which are the longer term time frames. And so when the shorter EMAs are above the longer, they're blue, and on my indicator at least, you can call them whatever you want, they're blue, and then the longer term EMAs are green. So that's how you know you're in a bull trend. And when this flips to be bullish, as you see down here, when it started to flip bullish, that's when we started to trend upwards here. And then right here, once it flipped bullish again, we rode these EMAs all the way up to our potential top up here. Now, what happens when these start to roll over is they turn gray. At first, they start to turn gray, and that's what we're seeing right here. So this is when the faster EMAs are starting to go below the longer term EMAs, the slower EMAs. You can consider these to be the investor EMAs, right? These are where people that are investing in the crypto asset, they don't really care about the short-term trades. They're buying any of these dips that get into these green lines. So you can see all of these were buying opportunities, and then suddenly, they were buying opportunities until they weren't, and then suddenly, you got roasted. But that's kind of the way that it's a brief overview of how this indicator works. And so what we're seeing now is once they turn gray, they start to flip below the long-term EMAs. You can see the long-term EMAs right here are starting to flip as well. And so then they start to turn gray. And then once they start to actually catch up with the shorter EMAs, which turn dark blue when they're bearish, meaning they're below the long-term EMAs, now you have the most bearish scenario on this indicator. So the most bearish scenario on this indicator is when you have the red long-term EMAs and then dark blue short EMAs. So this is strong resistance for price, and this is very significant. If we go back and we look at the back testing of this, here's an example of when we were in that period of time. This was the drop in March that we had. You can see that when we first test these, we're rejecting. It takes up multiple tests before eventually we go through it. And this was a period where we were oversold. So this is a different scenario than we're in now because we were significantly overbought. So when we're up here in near all-time high territory, I mean right now we're not at 36K, but we were. This is a different point in the market cycle. So that's also something to keep in mind is when you're at a different point in the market cycle, like the end of a bull run, potentially, which is what this indicator is potentially telling us here, we need to be aware that indicators like this are telling us the trend has shifted from the momentum being in the bull's favor to the momentum being in the bear's favor. So now the favorable trade, if you're using this indicator, meaning the trade that will likely lead to the most profitable outcome, is a short. So that means people that are using this indicator are going to short now. And this indicator is representative of just people that use EMAs in general, because that's what this is. It's a collection of EMAs with color sequencing. And so this is very important to keep in mind. And that's why I'm highlighting this is the number one thing that I want you to take away from this video is this indicator and how it's flipping to be bearish after, the last time it was red, the last time those EMAs were red was back here in April of 2020. So just keep that in mind when you're looking at the charts. So if we go to the lower term time frames, let's go to the 12-hour. I'm going to turn the super guppy off for now. If we look at the 12-hour time frame, we're starting to have the makings of a bear pattern. We have 7.5 hours roughly until this candle closes. If this candle right here closes below this low, this 12-hour low, because you see right here, we came up, formed a high, low, lower high, below this one, very clear, lower low. And so now this right here, well, that's on the 8-hour time frame. So let me show on the 8-hour time frame in a second what that yellow box is. But on the 12-hour time frame, this white candle right here will turn into a resistance, and you can use a rectangle to represent that if this candle closes below this low from the 27th here. So now let's look at the 8-hour time frame and see. So the 8-hour time frame, if we pull this box over, we have our resistance level right here, and this is the resistance level that we're looking at. This is the highest time frame resistance level at this point, unless that 12-hour prints. And so this is a confirmed 8-hour resistance with an 8-hour bear trend here, with a high, low, lower high, and then lower low with both of these candlesticks. It's very close, but you can see the low here is 37,168, and the close here is 37,021. So it's below this low, then the next candle closes below it as well. So this is a valid resistance level on the 8-hour time frame. So this is a potential short entry on this candlestick with your stop loss above. That's something that I'm potentially looking at. I don't really like it coming off of the weekly support, although the EMAs are 100% confluent with it. If we look at the super guppy on this time frame, it hasn't even, this is the first time it tested the longer term
To help
EMAs.
slow the spread of
Sorry about that.
please observe social
um,
distancing advice issued by the Irish
so
Health
just
Control and keep a
ignore
space
that
of
for a
2
second. It's going
metres
to be
or a
done in a
distance of
second.
6 feet
But
between
yeah,
you and the
if we
window.
look at the shorter term time frames, the 4-hour time frame, this is our resistance zone right here. So we can pull this up to here if you're on the 4-hour time frame, and that starts at about 39.3 and goes up to about 40,000. So right now, it doesn't, to me, it's unless you're a short-term scalper and you're looking for the short-term push up to the resistance level, it doesn't look like a good zone for a trader at this stage. You know, if you're trying to buy the higher low here, like on the daily time frame, one of the ways you can play this is, okay, we've had a pretty significant rise in price, right? So you can look at this, and this is called a bottom fishing play. We've risen about 40%. So for us to go down and make a new lower low without coming up and without forming a higher low first, we would have to draw down about 29%. Now, that's a significant amount of percentage points. And so what you can then say is, okay, well, that's a large amount of percentage points. So the likelihood of that is low. So I'm going to look to buy the dip somewhere down here, above this low, in anticipation that we're going to set a higher low in the daily time frame before potentially coming up, forming another lower high, and then going down again. But at least, you're playing that bottom fishing play of setting the higher low. So if you're playing that, then, like we talked about in yesterday's video, the only support zone that exists down here, unless we're looking over here, like there's some down here as well, but I don't have them drawn because price action over there is pretty old. And the price action over here has already went into these several times. So there's probably some levels over there, but this is the main level to watch. So people are already kind of trying to get that daily higher low here. You can see that with this candlestick. People bought this above average bull volume here. People buying the dip. So this may push us up into that 8-hour resistance. Now on that 8-hour time frame, this is the last thing I'll say, is on the 8-hour time frame, if this does end up being our daily higher low and the bottom fishers got their orders in down here, then this resistance zone, the yellow resistance zone that we're looking at right here, is the zone that we're going to need to keep an eye on. If we go above this zone, let me grab my tool here. If we go above this zone without rejecting off of it, and we close 2 candles above it and we retest it, that's a good long zone. So that's a potential trade, but the more likely trade is this is going to hold, in my opinion, because of the confluence with things like the EMAs. This is the only thing, in my opinion, that's looking very interesting in terms of a bullish move. This Kijun on the Ichimoku cloud has been flat since May 19th, and this is basically acts as like a magnet to price when this is flat, and so that is significant. And if we do move up, that's up to about 44,400. So that would be the short entry using this indicator. If we did go up to this for magnetization purposes, then you would short off of that, and then you're targeting new lows. So that's something I'm also keeping an eye on. So that's what I got for today, folks. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course that we just released on Leutheria.com. This is where you can learn all of the different fundamental elements that you need to get started making consistent profits trading cryptocurrencies like Bitcoin and others that we talk about on these videos. You can learn how to do all the stuff that I talk about on these videos going through that course. It's very simple. We're currently running a 20% off discount through the end of the month, so go check that out. And until tomorrow, onward and upward.